Welcome back, folks. In this video, I want to break down my long that I took in the New York session yesterday on the NASDAQ. Okay. And initially, what I saw was that the NASDAQ took out liquidity. Okay. You can see that we have this low that the NASDAQ took on its way down. And this is a pretty significant move down. And essentially came into this 4-hourly bullish fair value gap. Right. So at that point, I was interested in taking a long in this market, even if it was just a pullback to rebalance, right? So if we look a little bit higher, we can see that we have this. Let me draw this here, this up candle here, right? So on the move down, we go through that up candle, and then I kind of expect the market to come back up at least to the open of that up candle for rebalancing, okay? So let me just make sure you understand that. So on this move down, why have we come down there? Well, we've have an objective to take out liquidity resting below that particular low, okay, and to come down into this bullish fair value gap on the 4-hourly time frame. Now, this is a pretty shallow run, right? That there, the very shallow run of that low. So I do think we will come back down there again. Okay, that's not a trade recommendation. Just monitor the price. Look for bearish signatures and see if you can, for a paper trade, a demo trade, or just monitoring price action, frame a short setup using a bearish ICT signature at a key time, like 9:30 or 10 a.m. or 11 a.m. Maybe check the news calendar. I think there's some high impact news today. And just see if you can align a bearish signature that may indicate lower pricing. If that's the case, then I would expect the market to get back down below that low. Again, that's not a trade recommendation. You're learning about price action on this channel. Okay, so learn. Monitor price, right? It may not get down there, right? You've got to have the key elements that indicate a potential move lower. So once we went through with all down candles, then the market needs to redeliver price to rebalance, right? And then I expect the market to come back at least to that up candle that I went through. And that's what we see. Okay, so that was the kind of the reason for my long. Now I'm going to drop down to a lower time frame, show you the executions, and talk about how I managed this trade. Okay, so this is a 1 minute time frame, and that's typically what I use for entries. And the box down the bottom here, that's our 4-hourly bullish fair value gap. Okay, and I'll start to see that the market is starting to move up and respect that level. And so I take an entry. Okay, if you look very closely, you will see on this 1 minute time frame, you might have to, let me just see if I can show it to you. I'll drop down on the 1 minute time frame and see if I can show you. There was a bullish fair value gap, which I use for entry. Let me just scroll back to that price area. Okay, so you see how the market has responded and reacted from that bullish fair value gap in the 4-hourly time frame. In doing so, in this move up, it has formed a bullish fair value gap on the smaller, lower time frame. Okay, so I have watched the market come down into there and just making sure it's respecting. And then on this move down is where I took my long entry on that 1 minute time frame. Okay, so that's what you see there on the execution. That's why I've taken my entry there. You can see it's bouncing back up from that 4-hourly bullish fair value gap. Now these are important levels, right? I've mentioned these before. This is a volume imbalance. Okay, so let me show you where that is on the chart. I think that's from a, do I have it on this chart? Let me see if I can find that for you. So there is the volume imbalance. Okay, you should always have those levels marked on your chart. Okay, so it's that yellow box there. And what a volume imbalance is where you don't have body candles going through a particular price range. So you can see through that yellow box, there's no body candles. Okay, it's just all wicks. So they're important levels. Okay, so when the market, you can see first pumped up from that support zone. So you can see that the market first pumped up from the 4-hourly bullish fair value gap, it found resistance at the volume imbalance. Okay, come back down, support at the 4-hourly bullish fair value gap, as well as holding the 1 minute bullish fair value gap that I've shown you. Now we expect it to go through the volume imbalance. Okay, and then we have consolidation, right? So I'm already long at this point from down below. And once we leave this range, okay, I move my stop up to just below the volume imbalance because I expect that to hold. Okay, now this green line here is the weekly open, and that's essentially my target. That's where I'm expecting there to be a level of resistance or where this market's heading to. Okay, and that's further confirmed when I see we are forming equal highs just below the weekly open. Okay, so at that point, I have a choice. I can either close my long position, which I've entered from down there. That's a pretty decent move, right? Or start to trail my stop, which is what I did, right? I started to trail my stop, and my ultimate exit was just at that level there. Okay, so always have your volume imbalances on your charts. Okay, and look for support at key discount PDRAs. Okay, and look for reasons why the market might be turning around, right? So for example, as I've mentioned, initially the market was moving down to the, let me just clean this up. So let's jump to a 4-hour time frame. Okay. So initially the market was moving down to take liquidity and to come into a level of inefficiency, right? So that's here, this low and this 4-hourly bullish fair value gap. Now, why is the market going to turn around? In addition to that level being a discount and in addition to taking liquidity, well, the market's come back down and we've only delivered sell side. Okay. And so this level is important, right? That green, that's the last green candle on the way down that this market's gone through. So it needs to at least get back up to that green candle to offer buy side price delivery, to deliver price efficiently. So they are a few of the reasons for me to take that long. Okay. So a few reasons. One, coming to bullish fair value gap on a 4-hourly time frame. We've taken liquidity on that move down. And thirdly, we've only delivered sell side and we need to go back and deliver buy side at least up to that candle. Sure, it can go higher. We might go and redeliver and take out liquidity resting above the market. Okay, who knows where this market's going, right? But at least my long was based on those assumptions. Okay, now as I said, my expectation on this market, and this is not a trade recommendation, monitor price, is that we will come back and revisit this area because in my view, this is now equal lows. Okay, and we've had a very shallow run through that liquidity pool. Okay, so I want you to monitor price and identify at the right time some bearish signatures that may indicate to you that we might be headed lower, and just monitor price. Practice on a paper or demo trading account or just paper trade on paper. Okay, so the price has now, after going down, has now redelivered back up to this up candle, the open of which is all it needs to do to redeliver price efficiently. Okay, now also let's also do this. Let's also mark out this wick. Okay, and see how does price behave around that level. Does that level offer resistance? Okay, notice we're also in a 4-hourly bullish fair value gap, which we have traded down through and are now pushing back up and potentially could offer resistance for a movement down to those equal lows. Okay, so monitor the market, see how this goes. That level there is also, I believe, a 1-hourly bullish fair value gap as well. That's the actual marking there. Okay, so in essence, we have a lot of resistance, right? A lot of premium arrays that could indicate repricing lower in this market. So monitor the market. It's not a trade recommendation. Learn price action. Identify bearish signatures at the right time to see if we do get a potential repricing lower to the equal lows on this 4-hourly time frame. Okay, now what would negate my thinking? Well, if we, for example, did not find resistance at this level, right? We've gone through and negated this bullish signature. We should have used that as support to go higher, but we haven't. And so therefore, that could now be potential resistance because that is a failed bullish ICT signature, right? We've gone through a bullish fair value gap. So that's why I would expect repricing lower. However, if we now get back above that bullish fair value gap, then I would expect that to be support for the market to potentially attack liquidity residing at those highs. Okay, so again, not a trade recommendation. I want you to monitor the market, identify bearish signatures if this level holds, look at timing and see, does the market reprice to those equal lows, or do we completely negate this current bearish setup by going through that bullish fair value gap, identifying and finding support there to reprice higher. That's what I want you to focus on. Okay, hope the video is useful. I will now talk with you in a future video.